For intraday analysis, I start the daily. And what I want to say here is that we are currently in a range. As we see, there is no clear daily trend. And the major top and bottom level is 1.1489 and 1.0511. So since it's a range, I expect the market to continue like that. And in the hourly, we see that an uptrend. But yesterday, the market, the euro-dollar breached the uptrend line here. So we have a weakness of the uptrend at the moment. And we have in mind also that this is a strong resistance level. So in looking into the price action, I consider that the chances are favoring falling lower than, just a moment, let me see the level here, falling lower than 1.1280. Sorry for that. And at the same time here we see this fall was yesterday. It came after Janet Yellen's speech. And just a moment, it's the first time that I'm presenting the webinar, so I ask your excuse for a moment. So here we see that yesterday we had this drop after Janet Yellen's speech. Okay, the euro-dollar rebounded back, so it's giving us a chance to reposition ourselves in the market. And if we look at the 15 minutes, the lower one, here it's the support level. Below that, the chances to go increases. Okay, so the next currency pair that we're going to look and we're going to discuss about it is the USD yen. The yen currency pairs had a lot of trading and volatility yesterday after the speech of Janet Yellen. Let's look at the USD yen. So Janet yesterday actually said that she does not expect to go into cutting the rates anytime soon, because there has been a lot of speculation in the markets that Janet will cut the interest rates. However, she said the opposite one, and she expects that she's going to gradually increase the rates. So this actually has triggered more risk averse in the markets, and because the Japanese yen is considered a safer currency, we saw increase in the demand of the Japanese yen, and the USD yen dropped further. And we see here that the USD yen reached a 15-month low at 112.30. At the moment, the oscillators are oversold. So with that said, we are expecting less chances for lower ground. However, the risk averse remains in the market, and we may see even lower prices than 112.30. Let's look at the price action. As I said previously, I see a 15-month low here. Okay, this is considered to be a good support level. Okay, we may go even lower though. So this one here we see 110.26. As Jakub said in previous webinars, 110 is considered a very strong level. And then on the hourly price pattern, there is a downtrend. MACD here is oversold though. We should be very careful on the short side. But if we look in the fundamentals, we are on a risk-averse driver in the market. And here it's the downtrend. I would expect a bounce up here before we continue lower.
If I could just add something on top of it, Adamos, is that as we discussed yesterday, there are three major support levels, or there were three major support levels up until yesterday. One was the level that you showed, 114.20 level. The next one was at 112.22 levels, and the final level is at 110 level. So as we are very close to 112.22 level now, it's just less than 20 pips difference. we could expect to see some minor, I think, retracement. What do you think?
Yeah, I expect actually to see here a retracement to could find the support on 112.20, and then we may see a retracement. At the moment, with the move that we have here,
especially
the retracement could go up to. Let me move this. The retracement could go up to 114.20, 114. So. Yeah, and this retracement actually is good because it's going to give us a chance to reposition on our short side.
Exactly. This is something that I was actually looking from you to comment. Many people see these retracements and as an opportunity to buy. However, these retracements should be seen in a trending market like this as an opportunity to sell again. Yeah. So if you're buying, that's I think we would agree, right? That we need to be cautious about the long opportunities. But exactly, whatever it is, should be long living. I mean, short living.
Mm-hmm. Yeah, because if you're going long, you're going against the trend. So this is minimizing your chances for a profitable trade. You know, I have a concern though about the USDN because the lowest it goes though, Bank of Japan could intervene in the market. So at the same time, I'm believing in the downtrend, but I'm following very closely the Bank of Japan releases and any clues that could intervene in the market, like they did in previous times.
I think they're gonna do it, but next Friday. They generally tend to do it on Fridays. So we could see something like that, not this, but the following Friday, especially when the USD Japanese yen hits the 110 level. It's also psychology support zone for us as well. Yeah. So we definitely will be going long and a strong long from 110 level. But until then, it's not the time yet, you know. Whatever we will be longing, it would be short-term intraday purpose only, not a swing positioning.
Yes, I agree totally with you.
All right.
Okay, so yeah, and actually the next thing that I was thinking is that we saw yesterday Janet Yellen increasing the risk averse of the markets. So we saw safer currencies like the yen strengthening, and we can say that, okay, I said previously that I expect for euro dollar to be bearish today, and at the same time I expect USD yen to be bearish as well. So some good trades could be the euro yen, but and here we see that is near a very strong support level, strong weekly support level, and daily as well. Previous bottoms have happened before.
Today she's
nevertheless
anyway, so we will see the continuation of the risk-averse sentiment in the market, I believe.
Yeah.
Right.
Yeah. So yes, I think that the risk-averse will continue for today and tomorrow as well. And yeah, China is on bank holiday still. So, and any negative fundamental release from the U.S. economy side will have a risk-averse build-up effect, because the lower the U.S. economy goes down, the risk-averse goes up, because it's impacting the risk, the emerging markets immediately. And as long as they keep the rates high, as long as they don't cut the rates, the Federal Reserve, then emerging markets have problem because they can borrow with higher costs, and it impacts. When it impacts emerging markets, we'll have a risk averse in the forex market, and so I believe that the risk averse will continue, and could continue the next week as well. As you said, could continue until 110 on the USD yen.
And that's the time that we will see the Bank of Japan acting once again, dropping. Probably, actually, we could expect them to cut the interest rates on their side one more time. That's the new tool for the central banks to go in the negative side.
Yes. Yeah. So yeah, I can also see that the euro yen could go below 126.86 and could happen today. We see that it's trading there today. So if we see a break of this level, and we could see that immediately after the webinar as well. It's something that's taking on now. So, and any trade below that could place, let's say, a tight stop loss, because could be a fake break as well. So we can trade below 126.80, and that will give a lot of chances to go lower. However, we should be cautious for a fake break. Nevertheless, we see that the 161% Fibonacci level is at 122.80. So I consider that as a possible good trade. And
do you think that the immediate target though stands at 125 level?
At let me see.
As an immediate
125.
Yeah. If you look at it overall, we would see that historically 125 level has been
yes,
more important level than anything else.
Yeah, actually 125, it's a historical level as well, a psychological level as well.
Mm-hmm.
And yeah, 125, yes, we see a bottom here before, and we see a peak as well. So yeah, it could be the next target for this. And actually from 127 to 125 is 200 pips, and can give.
And that's also actually falling pretty much in line with the USD Japanese yen's 110 level right now. So we could, yeah. I don't know how to put it, but we could speculate, let's say like that both the USD Japanese yen and Euro Japanese yen could fall to that level, I think, at least on a short term, before Bank of Japan takes an action and push them up once again for another 500 to 1,000 pips. That should be an easy achievable target.
Yes, and actually, even you never know, because if the euro get weaker, could go even lower. It's not only on Bank of Japan side. And what I have noticed recently is that Eurozone has, some more issues at the moment, because yesterday I saw the Greek bond yield going up. That indicates higher risk for the peripheral countries of the Eurozone. And Greece is going into political turmoil again. So we may see rise of previous issues in the Eurozone, which never ended anyway.
It's like a limbo mode, right? It goes like a wave, up and down. It's never going to be ending anyway. I think, I don't want to be negative, but with the way they did with Greece, I think they were just supposed to cut it off. But anyway, I don't want to discuss the politics here. All right.
Yeah.
I think you also had a special commentary that you wanted to share. You want to talk about it also for just a minute?
Yes, of course. And anyway, with the analysis and everything, I almost forgot about it. So, but it's something that is very important. So anyway, the webinar today is sponsored by Fidelis Capital Markets. Fidelis Capital Markets is a pure STP broker, and currently I'm the head of brokerage of Fidelis Capital Markets. And I have a very special gift, let's say, today. So for all the participants, we can offer a lower spread account. We will offer the lower spread account to the today participants that they will open an account, a live account, and fund the account. I will specifically take care of it. And you are welcome to open a live account and deposit funds. The spread starts, for the low spread account, starts from 0.8 pips. So it's below 1 pip, the spread for the live accounts.
So traders pretty much get almost like a professional account but without have to deposit $30,000-$40,000, right?
Exactly.
All right.
Yes.
Okay, guys.
And
I think it might be worth to try it. I mean, especially for the fact that I know many of you guys are asking how to choose a reliable STP account. Fidelis Capital is an approved broker on A to Z Forex side as well. It means that we have tested them, and we can vouch for their reliability on the platform execution, withdrawal, and deposit side. So go ahead and try your account. I mean, take the advantage of it. I don't know what's the minimum entry size, but after this call, you can contact them, fcmforex.com, and ask them for the details. They'll give you the opportunity. In the meantime, I want to take the control from Adamos and start sharing my own desktop with you. 1 second, please. All right, guys. As we were discussing from yesterday, we were commenting that below the moving average that we had, basically 1,186 level, we were actually targeting further bearishness. We did have further bearishness, but it was only capped by $4. Meanwhile, our bullish entry triggered as well, where we were saying buy above 1,197. And that being said, we are right now with that entry that we had on the bullish side as well. We are 140 pips or so on positive side if you took the opportunity. And I think it's going to be continuing, at least for the time being. However, though, I would be looking for the Janet Yellen speech once again today and enter afterwards. So after her speech, possibly the long opportunities could stand, I mean extra long opportunities, could stand above the 1,215 level. And if you have been following this analysis for the last 2 weeks, I have been putting major emphasis on the 1,222 level. So it is our major bullish target for the time being. So go ahead and take advantage of it as we are probably going to be reaching there. But be cautious from that level onwards, because of the fact that there is a likelihood that once the pair, or not really the pair, but the yellow metal hits the 1,222 level, we might have a bearish retracement with the targets towards back to 1,200 level. Now, I also want to talk about the crude oil. Yesterday, when we were talking about the crude oil, we did mention about a level that we were going for. As I told you, crude oil analysis is not really subject to Fibonacci overall. Nonetheless, there are a couple of approaches that I can take. I'll just change the color over here to different one. Okay, let's see, take this one. So taking a close look at Fibonacci overall, we can see that on hourly time frame, of course, we can see that 100 level was broken below. And from the 100 level, we need to, of course, also add the 138.2 level on it. And if we take a closer look at it, we will see that first it touched it and it reversed back approximately $1.90 back to very close 88% weekly Fibonacci retracement zone. But overall, that level is broken already. So I believe right now at this given moment, our immediate target is at $26.04. And from $26.04 level, I will actually be buying. So I will be looking for a buy opportunities at $26.04 level, and my targets will be back towards the 28.90 level. But before that, I'll be cautious at $28 overall. So it gives us opportunity to chase approximately 200 to 300 points. But of course, whenever you are entering the market with such volatile tradable instrument, you also need to be aware of the risk and use your stop loss, I believe, at 50 cent level. So if you are entering at $26.04 or 5 level, move a stop loss of $25, $55, $25.60 level, just to cover up yourself from potential further downward risk. However, on the other side, $25 is itself a psychological level for crude oil, and it's a very important level. Therefore, we see major hedge funds now entering on the long side of crude from $25, $26, $22 levels, and I wouldn't really listen to investment bank analysis right now saying that they see the crude at $20 level, because it will not happen.